Right. So far just I finished national income. Now enter into another fundamental chapter, very important. That is right, inflation. Right. Second chapter, inflation. Right. So what is inflation? Right. Um, which is having more effect over the economy. Whenever inflation occurs, then RBI subjected to irritation. The government of India also subject to irritation. And MPC Monetary Policy Committee of RBI, right, increase the interest rates to control money supply. So it is understood that which is a very important fundamental chapter. Yes, they announce inflation once in month, right? So according to inflation, both monetary measures and fiscal measures are taken, and every country, right, take care about the inflation. Yes, then what is inflation? Now we should try to take it. Here continuous rise in price is treated as inflation. You see here the basic question, why price rise taking place. Yes, I have to explain. For example, market is having two opposite forces. One is buyer, seller. The buyer, that is taker, the seller, giver. So in economics term, buyer, that is demand, the seller, supply. So buyer buying the goods with money, this is money supply, and the seller gives goods to the buyer, goods supply, isn't it? So this is market. So in any market we can see two types of opposite people: taker one side, giver another side, buyer one side, seller another side, demand one side, supply other side, money supply one side, goods supply other side. For example, if you go to a shop, you become a buyer, you purchase the goods from shop. Shop is the supply, shopkeeper is the supply. So that is why here shop, right? Here buyers, purchasers, isn't it? So we need to maintain balance between these two forces. Demand must be matched with the supply. Whenever mismatch which is taking place, then we have to face the problem. The problem is named as economic problem. It is understood that economic problems are erupted whenever mismatch which is taking place between two opposite forces. The forces are demand and supply. So that's why we need to maintain a balance between demand and supply. In such a way, measures are taken. You see, we take right a clarification here. Okay. The clarification is buyer is having generally money, seller is having generally goods. There is a goods supply and money supply must be matched. For example, whenever mismatch we have, then what happens? For example, markets. Here demand, here supply. We need balance. For example, in certain circumstances, demand is more than the supply. Means we have a much more population, we have more buyers, but not goods are not there, right? Okay. Then what happens? Here price rise taking place. Okay. Price rise taking place, right? It is inflation, isn't it? For example, inverse situation, opposite situation takes place. For example, supply exceeds demand. More goods are there, but no buyer is there. Then price of the goods down. It is treated as deflation. So price, right, fell down. Deflation. Price rise upwards. Inflation. Inflation, deflation are the problems. Why? Because in the inflation period, buyers are affected. In the deflation period, sellers are affected. So don't excuse inflation, deflation. When buyers affected, they disappear from the market. Sellers are affected, sellers also disappear from the market. So next stage, no production, right? So that's why it is understood that inflation is a terrific problem. And with reference to India, inflation is the close friend of India since 1947 till today. Why? Because demand means population. India is a populous country. 144 crore people according to United Nations Fund for Population Activities. Okay, in order to face such demand, we need to create supply. Supply is not complied with the demand. That is the main problem. So price rise problem is not erupted now. Okay, has been running since 1947 till today. That's why people not able to purchase more goods and services. That's why they are subjected to diseases, and they are not able to get the comprehensive food. Okay, so this is a problem. So inflation not be excused at any cost. Why? Because inflation creates nuisance. I think it's here. Yes. So price rise treated as inflation, price down, deflation. Right? So that's why both inflation and deflation are the economic problems. Why? Because we have to save the sellers also, we have to save the buyers also, So buyers and sellers are the must for the market. I think it's here. For example, inflation period, buyers disappeared. So sellers also disappear. The sellers disappear, no production, no production, production fall down, then recession, then next severe step, recession leads to depression, isn't it? Here also, when sellers disappear, buyers also disappear. Buyer disappear, production falling down. Production falling down, it is recession. When you don't control, recession leads to depression. What you understood? Here, inflation leads to depression, deflation leads to depression. Very terrific problem. So that's why one side government of India, other side Reserve Bank of India taking measures to control inflation. I think it's clear. Very nice. Move another page. Right. So it is a very, very fundamental chapter. Of course, questions one or two may be expected, but thing is that it is a base for the economy. So that's why candidates need to know fully about the hidden meaning of the chapter. Thereby we will be very comfortable. Okay. Yes, you see here. Okay, inflation. Right. Here price rise. Okay. Isn't it? So as I told you, right, in the market we have a demand, we have a supply. Demand and supply. Right. Here demand exceeds supply. Here supply exceeds demand. Right. Demand means you need to remember that is buyers. And supply, sellers. Sellers having goods, buyers having money. Right. So price rise. When price rise is taking place in short period, price rise taking place in long period. Short period means less than 12 months, 1 year. Long period means greater than 1 year. Isn't it? So whenever a price rise taking place above 1 year, it is inflation. And whenever price rise taking place short period, inflationary gap. So between these two, according to Mr. Keynes, inflation is the problem. Inflation gap is not the problem. Inflation is the problem. Why? Because in the period of inflation, people can't bear the price levels high for long periods. In short period they can manage. Okay, but long period they can't manage. So according to Mr. James Keynes, inflation is the economic problem, not the inflation gap. I think it's here. Right. And the same thing here. Here price down. Price up. Price down. Price down again short period. Price down in long period. So when price down in long period, more than 1 year, just what I explained above, right? It is deflation. Deflation is the problem. It is deflationary gap. Gap. Gap is not at all a problem. Small. It means in short period. But long period is the problem. So according to Keynes, deflation is the problem, inflation is the problem, but deflationary gap, inflation gap are not the problems. Why? Because they exist in short period, we can bear. So whatever the problem which is existing in the economy can be borne by the people. Why? Because it is short period. But the same problem persists, right, for longer period. The people, right, get some anxiety and some irritation taking place. That's why here we got one more word, right? So it is understood that price rise, okay, short period okay, but long period not okay. Price down, short period okay, but long period not okay. So long period inflation, short period deflation. I think it's clear. Yes. So it is understood that according to experts, every country need to take remedial measures in order to control inflation. That's why in India also there was an agreement between RBI and Government of India, right? So RBI and Government of India an agreement. So at any cost, inflation should not exceed above 6%. 4 to 6%. This is permissible. Comfortable zone of inflation. That's all. More than 6% should not be excused. In such way, measures are taken. Right. So far, we learnt how many words here? Right. Inflation we got it, in deflation we got it, inflation gap we got it, deflation gap we got it. So deflation gap, inflation gap which existed right in a short period, that's why we can bear the problems which are erupted in the short period, but in the long period no, right? That's why here whatever the problem which is existed, okay, should be permitted to short period, but should not excuse for long period, which can create nuisance. Okay, I think it's clear. Yes. So price up, price down. Yes, we got it. So that's why here in the markets, okay, demand exceeds supply, supply exceeds demand. Okay, here long period, about 12 months, long period. Here buyers are affected. Why? Because price up. Here sellers are affected. Why? Because price down. Price down. Right? The price enhancement in long period can be treated as inflation, and the price decreasement in long period treated as deflation. If you don't control inflation, leads to recession, ultimately leads to depression. 1929, 30s, 2008. And if you don't control deflation, leads to recession. 2008. Don't control recession, leads to depression. Nineteen 2930s. I think it's clear. Yes, I think you got the idea how it functions. I think it's clear. Any doubts? No doubts. So that's why here inflation, deflation. Right. Okay. So inflation, right, especially for India, inflation is the severe problem rather than deflation. Why? Because it is a populous country, right? So we need to have a much more production. Yes, otherwise, right, people face right price rise problem, right? That is the main problem, right? Okay. So inflation, inflationary gap, deflation, deflationary gap. Yes, okay. And one more thing I have to say on this occasion, that is inflationary gap, deflationary gap. These two words are explained by Mr. J.M. Keynes. According to Mr. J.M. Keynes, uh, inflation gap will not have a negative impact but may have a positive impact. Why? Because here price up but short period. Here sellers are benefited. Sellers are benefited. But only for short period. Deflationary gap here also plus point. Why? Because price down. Short period. Okay, here buyers are benefited. They buy more. Okay, that's why year plus. Right. So according to Mr. Keynes, uh, inflationary gap is permissible. Deflationary gap is permissible. But don't excuse inflation, deflation, which led severe problems, which are recession and depression. I think it is here. Yes. So that's why we have two organizations to control this problematic issue. So what were the organizations? One side from Reserve Bank of India, other side from right Government of India. Right? They look after to control the inflation problem. But if just I have to one give right clarification, we are facing this problem. We are facing this problem right since 1947 till today. Also, we are facing the problem. Why yes, we excuse this long-standing problem. I don't know. Right? The solution for inflation, increasing the right supply. You see here to right control right inflation. Right? Here two forces. Right? One force, right, Reserve Bank of India. Second force is Ministry of Finance. That is Government of India. They are taking their best right measures to right control inflation. The measures which are taken by the government to control inflation can be named as monetary policy. Monetary policy. And the measures which are taken by the Minister of Finance to control inflation named as fiscal policy. Fiscal policy. So with the help of monetary policy and fiscal policy, right, the problem inflation is to be controlled. So what are the monetary policy components? What are the fiscal policy components? Here monetary policy components are money supply, as rate of interest, right? Then next one is your exchange rate. exchange. With reference to fiscal policy, government revenue, government expenditure, government debt, taxes. These are the components of the fiscal policy. With these components, nothing but fiscal policy. With these components, nothing but monetary policy. Yes, one side Reserve Bank of India, other side Ministry of Finance, doing their best to control inflation. But the permanent solution for inflation is just demand exceeds supply, price up, price is upped. Okay, so we should try to increase the supply chain. Yes, this is a measure should be taken. That's all. Supply chain should be increased. We should try to make more producers. Right? In such a way measures are taken. Otherwise, no. India is a populous country. That is a problem. So, population needed more goods and services, but supply chain is not good. Why? Because 1947 to 1991, unnecessarily we suppressed the private sector, then supply down. Right? And since 1991, we are giving high priority for private sector. Then private sector wantedly control the supply to increase the price. Right? So they are having cartel, one association, thereby they can control the markets. Wantedly cut the supply to increase the production. So before 1991 we had a problem. Since 1991 also, yes, we have a problem. But the intensity of problem, lowered. It is correct. But much to be done. The producers are given full freedom and incentives to increase the production. Right? Why? Because scarce production leads to inflation. I think this here. So monetary policy constituted money supply, rate of interest exchange, then government revenue, government expenditure, government debt, taxes. These are all part and parcel of fiscal policy. So these policies are lent in public finance, that is budget. But just I am telling, I think it's here. This is something about inflation. Okay, moving to next page. Right. So that's why inflation, it is not an easy task. Much to be done. Why? Because it is a long-standing problem also. It is not a new problem. Why? Because since 1947, always demand exceeds supply in India. Okay, that's why we are facing inflation problem. Right. Okay. Right. So inflation, it is a common problem for every country, accepted, but that should not be existed. We need to take measures. Otherwise, people who are residing in that country face untold hardships. It is true. Okay. Why? Because we'll have negative repercussions. For example, whenever inflation is taking place, immediately RBI meets. Then they can raise the interest rates of banks. That is the problem. So, whenever interest rates are increased, no loan avail. Right? The investors, they can't get loans. They are not interested to give. Why? Because high rate of interest. Right? No loan means no investment. No investment means no capital. No capital means no production. No production leads to price rise, again inflation. Again inflation. This is the problem. So, in the period of inflation, increasement of rate of interest is not criteria. It is not good solution. We should try to increase the production. So increased production can control inflation, but increased rate of interest can't control inflation. It is true. Then why Reserve Bank of India increasing rate of interest? According to their opinion, in the inflation period, money supply seems more. That's why money supply, right, should be cut, should be reduced. Okay, money supply should be reduced. To do so, whenever rate of interest increases, okay, so the loans go down. Loans means money supply go down. This is the policy of RBI, but it is not so correct policy. Why? Because it is naturally, it seems right. Okay, you see here, price is up. Okay, how you reduce the price? Whenever supply increases, demand automatically price down. So what you have to do? You should try to increase the supply. Right? Supply of goods and services is the best source, best solution for the inflation. So increasement in rate of inflation, repo rate increasement, reverse repo rate increasement. What is this? Is it a genuine policy? It is not right. That's why since 1947 till today we are facing the problem of inflation. The main reason is solution that which is shown by the RBI, not satisfied, is disappointed. What RBI feels when rate of interest, nothing but, right, we should try to, as inflation, nothing but money supply seems high. Okay, money supply should be lowered. To do so, yes, cut the loan. In order to cut the loan, interest rates are increased. Whenever interest rates are increases, automatically investors, they don't take loans, money supply go down. This is the wrong notion what RBI is having. Okay, so that the permanent solution for inflation is production should be increased. This is the solution. Okay, I think it's clear. Nice. So this is a permanent solution, but increasement in rate of interest, increase the repo rate, increase the reverse repo rate, it is not a permanent solution. I think it's clear. Yes. Okay, so far we discussed, yes, so far we discussed right, discussed inflation, we discussed deflation, we discussed inflation gap, we discussed deflation gap, we discussed recession. Recession means your falling of economic activities. Then depression, fell down of economic activities, also discussed. Okay, right. Then the next point is how inflation is measured and how much inflation is permissible, and the limit of inflation, then optimum size of inflation are to be discussed. I think it's clear. Yes, we move into next page.